Hey, future home buyers, are you ready to start paying your own mortgage instead of paying for your landlord's mortgage? Today, I'm going to share the secret recipe for boosting your credit score to make those mortgage lenders love you. I'm Scott Appleman, your friendly neighborhood loan expert, and I'm here to make credit scores fun. You might be wondering, why do I even care about my credit score? Well, here's the thing. A good credit score can be the difference between you living in your dream home or having to settle for a tent in your cousin's backyard. And I know you're not here for that. So why does your credit score matter for a mortgage? Your credit score is like your adult report card. It shows lenders if you're responsible enough to handle a mortgage or if you're the financial equivalent of a raccoon raiding a dumpster. And trust me, lenders aren't going to lend a big pile of money to just anyone. They want to know that you've got your finances under control. Here's the biggie: money. A higher credit score could mean a lower interest rate. And over a 30-year mortgage, that adds up to thousands of dollars saved. More savings equals more cash for vacations, a cool car, or that hot tub you've been dreaming about. The first step is check your credit report for free. Time to get up close and personal with your credit report. Log into annualcreditreport.com where you can access all three major reports for free: Equifax, Experian, and TransUnion. Now here's the kicker. There's a decent chance that you're probably going to find a mistake or two. You might see a mystery credit card or a payment marked late that you swear that you paid on time. Think of it like a scavenger hunt, but instead of finding candy, you're looking for financial landmines. If you find something that's wrong, you can dispute it online, and sometimes just fixing these errors can jump your score up fast. And then you want to file that dispute. And yes, the credit bureaus are required to investigate, but while they're working on it, you're over here boosting your score like it's the credit Olympics. Step number 2 is pay down your existing debts like a champ. Imagine your credit utilization is like a closet full of clothes. You can have clothes, debt, but if that closet's about to explode, then it's time to clean out the closet. Lenders like it when your credit utilization is below 30% of your limit, and bonus points for under 10%. Less debt equals better. If you have credit card debt, start with the ones that are charging the highest interest. The more debt that you pay off, the more your score will climb. Plus, you're saving money and interest. It's a win-win. And here's a pro tip. If you have the funds, paying a balance down below 30% can actually give your credit score a boost. Step number 3. You don't want to take on any new lines of credit. So you know how you're at the store and they're like, want to save 20% on today's purchase by opening our store credit card? And I get it, it is really tempting because you want to save that quick money. But during the mortgage process, it's like going on a diet. Avoid adding any empty calories to your credit. Each time you apply for credit, it's like a little ding on your credit score. Lenders think to themselves, why is this person suddenly so credit crazy? Multiple inquiries within a short time make lenders wonder if you're about to buy a yacht that you can't afford. So this is gonna be the plan. No new credit for a while. Don't apply for new cards or anything like that. Just focus on growing that score like you're watering a plant. With less dinging on your report, you're already winning. Step number 4, become an authorized user. Do you want the fast track to a better credit score? Try borrowing someone else's good credit history by becoming an authorized user on their credit card. It's like your friend has a gold card and you get to be a VIP guest. But choose wisely. You want someone with a good payment history, not the friend who forgets their own birthday, all right? Being an authorized user means their credit card history shows up on your credit report. You got that instant street cred. And hey, if they're a little forgetful with their payments, steer clear. Their bad payment habits become yours in the credit world, and nobody wants that. No lender wants that. Step 5, set up some automatic payments. Save yourself from making late payments. We're just gonna imagine that your credit score is a plant. If you don't water it, it dies. And that watering, that's making your payments on time. Payment history is like 35% of your credit score. So yes, it really is a big deal. Set up auto payments on your bills. It's like setting an alarm for your credit life. No missed payments, no late fees, just smooth on-time payments that make your score go up. Ding, 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 ding. And listen, if you're a little bit forgetful, use reminders. You probably have a smartphone. Use calendar alerts or even apps to notify you when your payments are due. It's a small step that makes a really big impact. All right, step 6, keep those old accounts open. Do you remember that first credit card that you got when you might have been in college or right after you got out of high school? Well, even if you're not using it, keep it open. It's like vintage credit history, and the older your accounts, the better your credit age looks. Credit age is a factor, so don't close those old accounts. Even if they're like that sweater or that ugly outfit in your closet that you never wear, they still add to your credit score by just existing. Throw a small purchase on that card once in a while. Buy a coffee, pay it off, keep that account alive. The longer your credit history, the better lenders will feel about you. Think of credit monitoring like your secret agent tool. Every move, every payment, every change, you're there to track it. There are apps that can send you alerts on changes to your credit score. It's like a notification for your financial success. With monitoring, you can see the effect of all the hard work that you're putting in. Plus, if you see a credit boost, it's the perfect reason to celebrate. Maybe just not with a new credit card. Credit monitoring also helps you catch any funny business on your credit report. If something's fishy, you will catch it faster than an FBI agent in a detective movie. And here are just a couple bonus tips and common things to avoid. The first thing is avoid closing accounts, period. Remember, your accounts are like fine wine. They get better with age. Even if you're not using them, keep them open to show you've got a long, solid credit history. The next thing is to avoid co-signing. Don't co-sign for someone else's debt while you're in mortgage mode. If they miss a payment, your score takes a hit too, and that could crush your mortgage dreams. And lastly, patience is key. Improving your credit score takes time and a little bit of patience. Every little thing you do adds up. And trust me, when you're in a new home with your amazing interest rate, you will thank yourself. All right, let's sum it up really quick. Step 1, check that credit report. Step 2, pay down debt like a boss. Step 3, freeze new credit inquiries. Step 4, maybe become an authorized user. Step 5, set up autopay. And step 6, keep old accounts open and monitor them like a hawk. If you follow these steps, you're going to rock that credit score. It'll be stronger, shinier, and mortgage ready. Hit that like button if you're pumped to boost your credit score. Subscribe for more mortgage and real estate tips, and let me know in the comments what your biggest credit goal is. Thank you so much for watching, and here's to getting that dream score and that dream home. See you next time.